Hello and welcome to KYC. I am Sharad Dubey and let's start the show. And also a warm wishes for our entire audience, wishing you a very happy new year, happy 2026. But today on the show is a company where I'll give you some hints. Try to guess it. It has been buzzing a lot over the last 3 trading sessions in the small cap space. The company has received a 6,200 crore windfall, and remember, the market cap is on the lower side. The company will be transitioning from the specialty chemical side to a copper play. Lot of industry headwinds were there in the old business. So let's see what happens ahead. And the company is likely to announce a special dividend for the minority shareholders. And lastly, the company is planning to become debt free as well. Big debt levels coming in. So you must be wondering, which is the company? The company which we are talking about today is going through a big change, inflection point. But are the minority shareholders or the markets convinced? That's the question I will be asking the management, and also my analysis will be there at where does the company stand. The company's name is Kiri Industries. Everybody's talking about it. So over here we will be looking at this company, how it's going to transform from its current play of just a dye and an intermediate manufacturer. It's a very commoditized business, but company says it's a specialty chemical business. And we will be talking about some critical questions. First one is this operational profit turnaround. What happens to the core legacy business? Does it come back to the EBITDA profits? The second question I'll be asking is, minority shareholders need special dividend. How much will it be? Will it be less? Will it be more? Because it has tested the patience of most of the investors, this counter. And what is India-Asia Copper Project? They have a windfall. Now what they do with this copper business, we'll be asking all the details to the management, and the role of green chemistry products. Will this improve the realizations? That's what we'll ask Manish Kiri. He's the chairman of Kiri Industries, and the margin outlook for the dye and intermediate segment. That will be another important questions we'll be asking. So the management is here, and Manish Kiri, the chairman and MD, that's whom we'll be posing all our important questions. And a lot of retail investors have written to me for the analysis in this setup. But before the analysis starts, let's give you some details of flavors about what's the company all about. The company is very much important, and then we'll explain you the ratings, how it goes in our show at KYC. The company manufactures dye intermediates and basic chemicals. That's why perhaps the market has not given premium yet. And the completion of a DyStar stake sale, that is where the war chest comes in. A company which was very basic, a 10-year-old legal battle, and now a huge windfall coming in the company. Now what happens with the windfall? They will receive roughly 689 million on December 30th, 2025. Recently they have received it, and the amount is 1.7 times of the market cap. Look at it. The market cap itself is just 1 rupees. 1.7 is the additional money coming into the company. The legal overhang, it has been for years and years, and now that has come down. So of course it will help out with the lower finance cost or the lower legal cost as well. Now the company will diversify from a struggling chemical dye business. It has been under the dumps, and now it will move on to the copper segment in the Indo-Asia Copper flagship. Now that is where the diversification takes place. And we'll be wondering, with this diversification, what actually happens. There will be an integrated copper smelter and fertilizer complex which will be located in Gujarat. That's the initial plan coming in. The project cost will be 10,661 crore rupees. Roughly, you could say there might be some debt included also going ahead for this kind of a payment coming in. Now they're aiming for a strong expansion also in the trial production. The target, that's where my concern is also. It's December 2028. That means it's going to take at least, you could say, 3 more years. Tons per annum, that is something which I talk about. That's the overall, you could say, parameter to judge the company on. And the dyes business outlook, it has reduced its FY26 revenue guidance by 20% to 1,200 odd crore rupees. That means the pain is still there. Q3, Q4 numbers will reflect that. Guidance reduction led to headwinds in the existing dyes business. So literally the dyes business is a kind of dying. Expecting a 12,000 crore revenue by FY27-28 overall currently on the old legacy business. and management's execution is a huge risk for just the common business I'm talking about, not the copper business. Over that we'll of course come into it also. And also this FY27 and FY28 outlook. Apart from that, let's understand what actually is the KYC show. We have 8 ratings where we give the company a number coming in. There is an income statement, balance sheet, cash flow, return ratios, and of course there is a shareholding, street cred. Street cred is nothing but the stock price movement which has happened, be it 1 month, 6 months, 1 year, or even 5 years, what return the company has given to the shareholders. Valuation and outlook, that is also something we will be looking at for. And apart from this, the first parameter is the income statement. A lot of retail investors of the company had written to us to analyze this, and now we are analyzing it, and that's where my concern starts creeping into this company. 3-year CAGR is just 3%. Be it revenue, be it EBITDA, be it PAT, there's literally nothing there to watch. The company has been deeply impacted in the past because of these numbers, and because of that, and I haven't seen any kind of good green shoots also coming in, and management stated that guidance is being reduced for FY26. That means Q3 numbers might be muted, and Q4 also nothing much would be coming in. So because of that, I'll start with the thumbs down when it comes to the income statement. Let's go for the second parameter, and that is the balance sheet parameter, and that will be also very much important. And largely the book value is in the higher side, and that's around 3,200 odd crore rupees. And the concern is for borrowings. Borrowings is something which is very much important. Why? I'll tell you later on. Also 1,222 crore rupees of borrowing is there. Now almost 6,200 crores of inflows come in from the taxation settlement which has come in, and likely that this number will become zero. So that's actually a good point, but that's future looking. I judge a company on these financial numbers actually on what has actually happened. That's the important criteria I set up for my show, and that's around 180 crore rupees of cash balances coming in definitely. But net, because of just the cash balance suggesting some liquidity help in the company, I'll give a neutral rating when it comes to the balance sheet. Also, apart from balance sheet, cash flows are very much important in this kind of a business, but I doubt the cash flows will be for uniform or not, and it's largely erratic, and that's where my concern again comes back. PAT, there's nothing happening here. The losses are there. At times they are widening, at times they're coming down, but they are still the losses. That's the concern. Operating cash flows is just, it's been a massive outflow coming in, at least in the FY25 numbers. Net cash flows, it is very small, and it's kind of a lot of movements is happening. Definitely a big cause of concern if you're studying these numbers. So for that, cash flow also I'll give a strong thumbs down when it comes to Kiri Industries. Also, apart from cash flows is the return ratios, and there hasn't been anything, and I'm really sorry. The entire charts are not there, but the ROC is not meaningful at all for the company, and that's one of the biggest concerns for me, because there isn't much there, ROC, ROE numbers, and there's a prolonged weak profitability which has come in, and because of that, return ratios also will be a strong thumbs down. So financials, we can say out of 4 ratings, 3 of them have received thumbs down, and that's a very big concern coming in, and all these concerns will be addressed by Manish Kiri, who's the MD chairman at Kiri Industries. The 5th one is the shareholding pattern, and interestingly, the promoters have been lapping up stake, 26%, then in March 25 it was 31%, and then in September 25 also it went up to almost 37 odd %. But institutional support largely not coming in. That's an interesting thing. FIs are holding stake, minor profit booking coming in, but concern is domestic institutions very less or negligible. Interestingly, the public kind of interest has come down from 48% from March. That has actually come down to 40 odd %. But nevertheless, the retail activity is there. It's on the lower side. So that's something which we'll also think about why. Apart from shareholding pattern, which I've given a neutral rating, we move on to the street cred. 1 month stock has been flat. Of course, there was a 20% up move when the announcement has come in, but after that, it was selling started happening in Kiri Industries counter, and literally that news has absorbed. and it's almost 0% gain. 6 months, 12% down, year to date, 4%. And concern is definitely there, 2% it's up, in 1 year. So nothing has happened to the shareholders who have been positionally holding this counter, and last 5 years also nothing has moved. It's 10% up only. That means each year at an average 2% the company has returned to the shareholders. So shareholders are waiting for this company. What reward will they give? Is it just the stock price increase, or will there be some special dividends, because a huge windfall has come and a demand is coming in from the minority shareholders that they need something. Of course, we will be also tracking this counter, but from my side, it's a thumbs down. Moving on, valuations. Two names I have picked up. One is Kiri Industries, trailing 12 months P is 10 times, and Ultramarine Pigments, that's around 13 odd times. Technically, both of these counters are in an industry right now which is largely a commoditized play right now, and there's nothing much premium we should assign either of the counters, and that's what the market and the analysts have told me. Valuations for the time being, I'll just give a neutral as a benefit of doubt, but it's nothing that the stock might command a valuation premium. So we need to figure out, futuristically how things change. Will this be only a chemical play, or now a copper play comes in, then of course the valuations will start changing. But apart from this, of course, peers, we go into the next rating parameters, and that is the outlook. That's the last but the most important thing in my analysis, because now the company is only future forward looking, and if you just remove the past in the last 7 rating parameters in KYC, this is the future. Now they have reduced their business guidance, and that's one of my concerns, which is definitely there, because this number will be actually shown in FY 27-28. This 6,200 crore windfall, that's what everybody is talking about, and we will also understand where will this money actually go, how will it diversify. Also, apart from this, looking at the outlook, the company is expected to announce a special dividend. Now, how large it's going to be, that is something we will be looking out for, and the management has to say what's going to happen next, and they'll make the company debt free. That 1222 crore debt I spoke about, that's largely going to become zero, and the transformation into a copper play. Now it's not a chemical company anymore. Now it moves on to the copper. So how much benefits will come in, what are the synergies, what are the timelines, we'll give you all these details. But as of now, outlook is a neutral rating, but net my concerns are all there in the financial aspects, and it has not been satisfactory, and the concerns are also there on street cred. Some benefit of doubt, of course, given on shareholding and valuation, and outlook also. It is very optimistic, but I have taken a cautious approach, because the FY 27-28 numbers, still it will come from the existing legacy business. But of course, future is definitely there, which the street is actually looking out for. So net, for my KYC rating, I will be giving Kiri Industries 2 out of it, on the lower side of my ratings. But to understand more why this is there and the future what it is, there's a 2 different school of thoughts. I had a chat with Manish Kiri, the chairman and the MD of Kiri Industries, and asked him on the 6,200 crore windfall they have received, what's the specific percent of this cash where it's earmarked, whether it's for immediate distribution versus the reinvestment into the copper project. Do listen in.
See, majority of the funds which are coming in are going to be reinvested for the future growth. And that is what feedback we have been getting from many investors, shareholders, and during a lot of conversations which have taken place over a period of last 2 to 3 years. So it would be a small portion of the receipt which would be distributed as the dividend. Otherwise, the majority of the amount is going to get invested into future projects, and that is how we are going to create value for the shareholders. The percentage or how much quantum that would be has not been decided yet. The board will take a view and decide in the next few weeks, and will announce accordingly.
All right, in the next couple of weeks, our dividend announcement is likely for Kiri Industries. That's what the management is stating. But Manish ji, the DyStar dispute has taught a hard lesson to the minority, operation that thing was there. But for your new subsidiary, which is Indo-Asia Copper, what governance structures are you putting in place to ensure that in future strategic partners cannot trigger a similar decade-long legal deadlock?
So there are three things which we have done to ensure that we learn from the history. Number one, Indo-Asia Copper Limited is 100% subsidiary of Kiri. There is no foreign partner. There are no partners. It's wholly owned subsidiary of the company, and it is going to be that way. Number two, we have strengthened the board of IACL, and we have got very good people who have long years of experience in governance, projects, banking, as well as legal, all. So we have strengthened and strengthening the board and the governance of IACL. Number three, we have taken on board very experienced team, a management team, a separate management team headed by the separate CEO for the sector who is experienced in the sector, and we will ensure that the entire investment remains in India, is going to be a India driven, India import replacement project. So there are things which we will be doing in ISCL, that would be unique for catering the growth of the country along with the replacement of current imports.
All right, but my question again comes back to the proceeds. Now, do you intend to make Kiri Industries a zero debt company using just a small fraction of DyStar proceeds before committing to a new project debt?
Yes, absolutely. It is going to be a zero debt company. And as we speak today, in a matter of a week, it is going to be a zero debt company.
In just a matter of week, Kiri Industries is going to be a zero debt company. That's a very important statement coming from the management. But the Indo-Asia Copper project is a massive leap from the specialty chemicals to metals. Since trial production is targeted for December 2028, how will you ensure there is no execution creep coming in the cost or escalations in the timelines during this 36-month construction phase? There is still some time. Delhi abhi bhi dur hai. What's your take on that?
See, there are certain measures which we have taken. We have taken on board very experienced project management and execution team, along with an external, well-known project management and execution company. We have done quite a substantial work on ensuring that our vendors are selected properly. So very stringent vendor selection process we have gone through along with the experienced team, and we have ensured that every project execution risk is mitigated. So these are the factors will ensure that we are within the time frame of the announced deadline before which we will make the project operational.
All right, Manish coming back to the core business of dyes, revenue went 23% up in Q2, but there was an EBITDA loss, and there's always a quarterly overhang of, the legal cost which was coming. It was having roughly between 7 to 10 crore rupees per quarter. Now, exactly when do you expect the standalone dye business to return to double-digit EBITDA margins? Now that big overhang is done. So I want your view on that.
So now, having legal costs done with, we are not expecting much legal cost to come. It will be sharply dropping, expecting to go to zero within a quarter, but the that would improve the bottom line significantly. So in addition to having a beta positive, which we have been, bottom line would also turn positive soon. The dyes and intermediate business has been also going through quite challenging market situation over a period of last 2 years. So these are the factors which are affecting the profitability of that business. But as we just mentioned, the standalone business, the traditional business in a debt-free form is going to continue, and that would be helpful to have it in an auto mode and cash generation situation going forward. We are not expecting quite a significant growth coming forward from the traditional business. We are sitting on significant capacities in India, so we are not investing any new funds into the dyes the current business, and that is the decision of the board taken few years ago. But you will see that in a steady state, profitable, if not single digit, lower double digit EBITDA, and we will ensure that it functions in a cash generating mode.
All right, so important statement coming in from the management, a lower double-digit EBITDA for the dye business. But this dye and intermediate business, it's a very important thing you stated, that no chance of making capex expansion on this old business, and you should be, because it's just 48% capacity utilization was there in Q1 FY26.
Exactly.
And the
Exactly.
global textile recovery, it's still there globally. Some places it's definitely happening. Just give me a ballpark figure. What's the utilization levels you're targeting for FY27? And also, tell me, are you exploring any new green chemistry products to improve the realizations? That's my additional question to you as well.
2026 and 27, if the capacity utilization reaches to 70% of existing capacities, we would be happy. And that is the internal target that we have kept. Looking at the overall textile recovery, which is expected, and looking at the restructuring which is taking place after our exit from DyStar, we might be able to have some improvements in the market share. So that would allow us to increase our capacity utilization going forward in the next 2 years. With regards to the green technology, I would be very happy to to mention to you that almost all facilities of Kiri today are zero liquid discharge. So we are reducing our carbon footprint. Entire power requirement, energy requirement is changing to renewable energy very soon, in a matter of months. And in addition to that, we are introducing few more products which would be produced only from the recycled material. So that would allow us to contribute to the circular economy in the dyes and intermediates industry as well. So these are the initiatives that we are taking to be more sustainable, to have more contribution to the recycling concept, and also adding renewable as a part of our energy requirement.
So definitely, when you add this renewable segment as well, does it incrementally, help your margins out also?
Yes, exactly. It would also expand our margins. Agree with you. Agree with you. In a few years to come. Exactly.
All right. Thank you very much, Manish ji, to taking out your time and speaking to NDTV Profit. Stay tuned to KYC, and Happy New Year
Pleasure
to
is
you as
mine.
well.
Thank you.